So our next speaker is Richard Purcell from PruProtect.
Thank you. So I'm an actuary, so that probably makes me an industry insider. And at PruProtect, I am involved in the design, distribution and marketing of some of our products. So PruProtect, just to introduce you, it's a joint venture between Prudential, which is obviously a quite well-established UK insurer, and Discovery, a South African insurer, which is known for its kind of innovation. So we're a 5-year-old joint venture. In that time, we've grown quite a lot, and I guess one of our USPs, as we see it, is innovation, particularly around product. So hopefully trying to address some of those kind of issues that we kind of saw in the previous session. And this is around Vitality, which is one of our key innovations. And the way I describe it is essentially telematics for people. So you may have heard of telematics using car insurance to help insurers see how well you drive and then change your premiums accordingly. So getting a fairer premium for your car insurance. So we're trying to do the same kind of thing for life and health insurance. So before I go in and describe how this works, there's a few issues, I guess, that we need to address as insurers. So one of those is around pricing risk. So I guess that's what we're here to do. We are here to price risk. And so this is showing you a grey line, which is a mortality curve. It's what actuaries use to price life insurance premiums. As your age increases, then so does the risk of dying, and therefore your premium changes. Those are the basics of what actuaries do when they're pricing life insurance. But what we do is when we sell insurance, we also go through a process of asking you questions and we underwrite. So at the start, you've got this pink line, which kind of is lower. So we might say, okay, you're quite a healthy person. That means we'll charge you less. So you start off below the average curve. But that underwriting process kind of is quite limited. It lasts about 2 or 3 years. That information kind of fades away and you end up back on the ordinary mortality curve. So what we're saying is actually, well, if we can try and understand people's health over the full term of the policy, then that's quite interesting, that's quite informative, because we can say, well, actually, if you are healthier, then you're below the average curve, you might be on this green line, and therefore you deserve to kind of pay a lower premium because you're a better risk to us, and we can pass on those savings back to you. So it's effectively giving something back to consumers and gives us a framework to do that. So pricing risk is a bit blunt at the moment, particularly with underwriting, and so we need a program to help us make it more dynamic. So that's one issue. A second is around illnesses themselves. So we cover, or we provide, both life insurance and critical illness insurance. So it pays a lump sum if you become ill. If you look at how illnesses are changing, there's been a dramatic shift towards more lifestyle illnesses, and this bit of research is quite interesting. It's called the 3-4-50 model. It says there are 3 controllable behaviours, in particular diet, exercise and smoking, which are responsible for 4 very significant chronic conditions, including cancer, diabetes and heart disease, and they in turn are responsible for 50% of the world's deaths. So what it tells us as insurers is actually, if we can actually help people understand and slightly modify some of their controllable behaviours, that can have a massive impact on their health and also then on our risk as well. So we need to kind of build this into what we're doing. And the third kind of key issue is the general consumer environment. We are used to very much kind of consuming things right now. So we see like Apple and those kind of products which give us an immediate benefit. Things like life insurance and getting healthier, there's no immediate benefit. Life insurance, it may pay out in 20 years' time. There's no immediate gratification to me. Equally with exercise, that there's no immediate benefit. You can go out for running and it's good for you, but there's no immediate benefit to you. So we need to kind of build those factors in, and we need to sort of use things like behavioral economics to say, well, actually, if we can kind of use incentives and rewards and bring forward the benefits of things like exercise and some of the benefits on life insurance products forward, then that can actually appeal and increase the reward or the value of a product to consumers. So those are some of the issues that we kind of grapple with. And that's led us to create Vitality, which is a program built into our products. The 3 elements are, 1, knowing your health. If you know how healthy you are, you can do something about it. So we get people to go online, answer a few questions, and we calculate their vitality age. Number 2, then helping people to improve their health. So if they get active, if they go to a gym, go for a run, they get points, and then that means they can increase their status, their vitality status. And then that leads through to the reward. So we can reward people by reducing their premiums. We give them 50% off gyms, so again, that incentive to go to the gym and use it. And then other rewards like discounted holidays or free cinema tickets. So that kind of carrot, if you like, to actually do something and to engage with it. So that is the program, and we believe it kind of addresses some of those issues. So it means we can more effectively price, we can kind of charge more fairer premiums to consumers. It gives people the ability to change their behaviour and to modify some of those lifestyle behaviours which we know leads to illness, so we can help people improve their health. And it's a way of giving people benefits sooner rather than having to wait to claim to actually get any value from their policy. So that is Vitality as a model. Maybe wondering, okay, is this effective? So this is some experience from our parent in South Africa, who've been running this for about 20 years now. So the first graph is showing you mortality, so the risk of death, and it shows by engagement. So the most engaged is the grey bar. There's a significant reduction in mortality for people that are engaged with the program. The second is morbidity. So again, the most engaged people, there's a significant reduction in the risk of becoming ill, and also lapse risk. So there's a reduction in people cancelling their policies because they can see value in this type of product. They want to keep it. So this is telling us that it works for us as insurers. Our reinsurers recognise it as well. They give us lower rates. But from the consumer's perspective, they are seeing the value too. There's massive engagement in the UK just this year. 25 million Vitality points, 750,000 gym visits through the program. And Vitality isn't just used by us in the UK, it's used in as part of a network of insurers around the world, and we've got 7 million members with Vitality on their policy. So it is quite a widespread program. So how does it link with technology? So this is an example of an app we're launching in January to actually make Vitality more usable to people. So something they can have on their phone. They can see how many points they've earned so far, what status they are, so therefore how close they are to getting more rewards. They can see how many steps they've made today. So the more steps they make, then the more points they get. And also track their progress and how it compares to previous days this week. So see if they're actually progressing or not. So that's one of our own kind of apps, but also we partner with other people. So you've got people like Fitbug, Polar, who do this very well already. I've got a Fitbug, so I can see how many steps I make every day. I can plug it in and I can get points if I've done enough steps. But also then we're looking at ways of trying to integrate this with other technologies. So there's a firm called MapMyFitness, which is a sort of health technology platform which links into the likes of Fitbug, Polar, Jawbone, amongst other devices. And then through that, we will use that platform to kind of take that information. And if you've got one of those devices registered to us, then we can, again, reward people with points. So it's, again, making it more customized kind of solution. People can use whatever bit of technology they want to use and make it work with their policy. So that's a very whistle-stop tour of Vitality. That's very quick. Open it to questions. Yeah.
I'm Ben, I'm from Hotwire. How do you measure things like people stopping smoking?
So smoking is an interesting one. So we get people to go online and to kind of self-declare, say they're a non-smoker, and so they have to declare that. And then if they come to claim and there's evidence that they have been smoking, then we can say, okay, well, that was a false bit of information. So we get people to say up front that you're a non-smoker or a smoker. So honesty is what we're relying on.
Right.
Yep.
Hi, my name's Mark Grant from Insure the Box. I also do telematics for people, but I do it via motor vehicles. It's a very similar concept to the one that you're involved with. What I'm interested to understand from your opinion is we have a self-selection process. We believe that people are fundamentally good drivers, will therefore adopt our product. The people who aren't good drivers will probably try and avoid us. Your product seems to me a similar self-selection process, i.e. people that are fundamentally fit in the first place are actually going to adopt your product. Do you believe that you could actually change behaviour and people who were not previously fit people would actually adopt your product and become fitter, healthier people?
Yeah, so that's a good question. So I guess on their face of it, we do appear an insurer just for healthy people. But for one thing, I guess there's 2 points that there is. It's making insurance more tangible. So everyone is kind of interested in sort of improving their health a little bit, even if they're not the fittest person. You know, people are keen to understand their health and try and improve it a bit. So it creates a kind of something to talk about. So insurance is very intangible, and by having a device which you say, oh, actually, this is what I'm using to sort of see how many steps I've made, it's linked to my insurance policy. One, it makes insurance more of a tangible kind of commodity, which is an improvement. So it kind of makes it more of a talking point than it would be otherwise. And two, although it kind of appears as though it's kind of a healthy person's only insurance product, I guess if we look to Discovery in South Africa, who have been using this for 20 years, they've grown such scale they now have 30% market share because it's been so effective in actually reducing and managing the risk that they're now also the lowest priced provider in the market. So even if health isn't your number one priority, they can also then offer the lowest rate. So in essence, it's helped us to become or build a broader appeal than just have a kind of health element to our product. Yeah.
Mine's more of an observation, actually. I think it is an excellent start. I think you guys are going to do really well. I think there's a degree where the market will catch up with you. There's also a degree of knowing the South African market and how obsessed people are with this sort of thing. Culturally, are a lot more adaptive, but I see it growing over here. And I think trying to make insurance tangible where you have a continual dialogue is essential. And I think the medical way of doing it is going to have real legs. It's going to be interesting to see how. Do you think any of this is exportable to the more general life side of the business? So outside of health, so life insurance, and what can you sort of sell off the back of it as well? So some of the other products within the protection suite as well, or do you think it only really works when it's based on health data?
So yeah, we do have it linked to protection products as well. I think it is slightly bigger challenge because there isn't quite such the health link to protection products as there is with pure health insurance. But I think your other point is that, I think South Africa is a different market, so we have to evolve this and make it work for the UK market. There's a different mentality amongst consumers here, so we have to modify it. But as you say, I think it's one of our sort of steps to try and evolve what insurance is and does for people. Yeah.
Hi, Julian from TradeMap. On average, what saving are your customers making compared to average insurance?
That's a difficult one. It varies. So there's different ways of structuring it. So we can kind of give people an upfront discount of between 5 and 40% off their premiums, or you can sort of start from an average premium and then sort of work down so you can get sort of up to 40, 50% off your premium. So, yeah.
Not PSRS. It feels very much like a direct-to-consumer product, but I think PruProtect sell a lot of their products through the intermediary market. So can you just explain how that works?
Yeah, so we are only advisor-based insurers. We sell through intermediaries. But we believe it creates a kind of something for people to talk about. So we believe advice is important with insurance. People shouldn't be forced to buy something, and so advice is really important. And it gives advisors a tool to actually, talk to consumers about things. So it's a great kind of device for people. Again, that they see people getting their free gym membership or free cinema tickets, and they say, well, actually, I'm quite proud of the fact that I've got a discount with my insurance policy. It makes insurance more of a tangible product that people are prepared to talk about rather than sort of just death insurance. Yeah.
Okay, Richard, thank you very much.